I'm just watching people coming into the room and want to say good morning to everybody. We're just going to take a couple of minutes while some of the other participants are joining. I got the, there was 150 registrants for today, so I'm trying to not let that shake me and just hopefully there's some familiar and friendly faces or names because I'm not going to see faces. Just like I said, we're just going to give a couple of minutes just for everybody to get in the room and then we will get started. And I hope everybody had a good weekend and was able to take advantage of the weather yesterday. I certainly was able to rejuvenate a little bit with some of the beautiful weather we had. All right, I'm gonna get started because we do we have a lot of information to cover, and I want to make sure that we all get the benefit of all of our time. And thank you all for coming right on time. As other people join, they can just jump in where we are. So just to get started, I'm Megan Nesbitt. I'm the president of Abacus. We are in our 14th year of business. We have an amazing team of 11 people working with us. We work primarily with local business, doing bookkeeping, accounting. We work with business owners and decision makers on operational advisory, so looking at your staff, your systems, your processes. We also do tech advisory, and so, for example, how to move your business to the cloud, and then we do training, and so this would be part of our training offerings. I'm also proud that we've won 6 Best of Bermuda Accounting Service Awards, so big shout out to my whole team for doing amazing work. We do spend a lot of time doing payroll and payroll tax, so we work very closely with the BEDC, and offering this free webinar is again part of that offering, and a thank you to the BEDC for reaching out to us. We recognize, I just want to start by saying that payroll tax is really complicated and it's not easy to get right, so I'm really appreciative that you're here today, and hopefully we're going to take some of the complication out and assist with the filing process. We did offer a payroll tax basics webinar in January, and I spent a lot of time digging into the rules and kind of the words and the legislation. What we are going to do today is not go as much in depth with that information. You will hear some of the same, a lot of the same information actually, but it won't necessarily be as in depth because really today we want to focus on the hands-on tools that you're going to be using, which is the tax calculators, which we'll get to in a little while on the tax portal, and really wanting to make sure that this is useful for you. The vast majority of the information that's in the slideshow has been copied directly from the Office of the Tax Commissioner's website. So that website is going to be very, very useful for you as a resource. And we encourage you actually to develop a relationship with the Office of the Tax Commissioner. We've always found them to be very easy to work with and helpful in providing information. And again, they're really eager for everybody to get this right as well. So we want to just encourage you to reach out to them with specific questions you might have. I think there's a couple of housekeeping things. The slideshow will be sent out to all participants, and I think also, and I'm not sure, anyone who's registered is able to obtain a copy of the recording. I'm not sure if that's sent automatically or not. If somebody from the BDC can maybe let me know, I can confirm that. We want to ensure we answer any questions that come up. I'm not going to be I'm going to try not to do them as you ask them, because that gets a little bit distracting for me. We will stop and do questions. So if you have any questions, please put them in the chat box, and we will address them as we stop for questions. So let's get started, because as I said, we've got a lot to cover. So we are here. I mean, the topic is to get ready for the April 15th tax filing deadline, which we've got just a couple of weeks before that's upon us, which I can't even believe we're here at another quarter, but here we are. And actually, sorry, just before we go all the way into it, I mentioned that most of the information that I have in this slideshow is from the Office of the Tax Commissioner's website. So I did just want to pop there quickly. So if you at any point just put Payroll Tax Bermuda into a Google search, it will actually direct you right to the government's website. And so there's lots and lots of information, and we'll come back to some of these pages as we step through. So there's resources and all sorts of different stuff on here, but it's a good website, and you'll even notice when I say I've copied it directly, you'll see this in a slide in a sec. So our first, just to go through what we're going to cover today, is we're going to have a quick kind of chat around remuneration, which is basically what is taxable. So what should be included in the tax calculation. The two components of the tax calculation, which we will get into in depth, but is the employer portion and the employee portion. The payroll tax calculators, where to find them and how to use them. And again, I want to get hands-on with that so that you're able to use them. And then the tax portal, how to register for e-tax, how to make payments, how to use the tax portal, some tips and tricks. So as you're using it to try and again make that portal a little bit easier for you. We're going to talk about the late filing and penalty payments. So the not fun part of tax. There's probably no fun part of tax, but that's the least fun part of tax. And then I've got a specific Q&A section at the end, but I will kind of pause a few times throughout just to make sure we're really addressing anything that comes up for you. If we are not able to answer your specific question today, they are all logged, and we will be able to circle back if I have to go and get information to be able to assist you with your specific question. We will address those afterwards. So we're going to really try and make sure you have whatever you need to be successful. So remuneration. First off, it took me forever to get that word right. And so all of this information is copied directly from the Tax Commissioner's website. So taxable remuneration includes the sum of wages and salaries and benefits that are either paid in cash or in kind to employees, self-employed persons, and deemed employees as a result of services provided in Bermuda. So there's a few key pieces in there to be aware that if it's paid in cash or in kind, so if you pay something on behalf of an employee, that's still considered part of their remuneration. And that it is taxable remuneration is considered both for your employees, which is usually pretty easy to define, but also self-employed persons and deemed employees. And there's a whole definition around what a deemed employee is, which is anyone who provides service and shares directly or indirectly in the profit. So if you have shareholders who are directors in the company, well, directors' fees are taxable, but if you have shareholders who are providing services to the companies, any money that is paid to them will be taxable. So you want to really make sure that you have your arms around who's participating in your business and whether or not money's paid to them would be taxable. And it is the result of services provided in Bermuda. So I get this question quite a lot where I've got a consultant in another country, or there's someone who's, right now we've got kind of these digital nomads. So if you're a Bermudian who's now working overseas, anything paid to those people would not be taxable because it is specifically around services that are provided in Bermuda. Just to quickly go over the remuneration of a self-employed person or a deemed employee is the total taken out of the business for personal use. Remuneration is capped at $900,000 per annum per person. So for anyone of you who is lucky enough to be in a position to be earning more than that, you have a cap, or if you're performing payroll on behalf of companies who are paying more than that, the cap is $900,000. If you have foreign contractors and subcontractors working in Bermuda, so again, this speaks to services provided in Bermuda, payroll tax is due if they are working here for more than 4 consecutive weeks. So if they are, you've brought somebody in for 5 weeks on a project, then payroll tax would be due on the fees paid to them, unless they have a company set up that they are then paying the tax on to the tax commissioner. So your responsibility as the employer would be to confirm. And actually, this is a not just for foreign contractors, but some subcontractors. Again, we get this a lot. If someone's essentially working for you, even if they are calling themselves a subcontractor, your duty is to basically establish that they have a valid tax ID number and health insurance, which we're not going to get into today, because if they don't and something happens, essentially, and you can imagine this, it looks and smells like employment. So you want to really be careful around making sure you've got the right safeguards in place, that you don't end up with someone else's tax liability because they didn't do what they were supposed to do. And then taxi drivers, so I'm not going to spend any time on that because that was a direct pull down from the website. Actually, just to go back here, the other thing that is included in remuneration, which isn't actually spelled out right here, are dividends. So for local companies, if a dividend is paid to a deemed employee, it's taxable. There is a $10,000 per year per shareholder tax exemption. So if a shareholder, again, is participating in providing service to the company through a variety of ways, and let's just say at the end of the year, a $40,000 dividend is declared to them, 10,000 of that would be tax exempt, and just the tax on the 30,000 would be due. This is probably, I could spend a whole webinar on the various scenarios around dividends, but really the take home is pretty much anything that is pulled out of the business, particularly for local companies. For those of us who are working in the business, it is taxable. And so again, please reach out to the tax commissioner's office. We also will be, I'll talk about this at the end. We've got some hour slots, which are paid slots. The tax commissioner's office is free, so they should always be your first resource for questions. If if you've got a situation where you're just not really sure what the right thing is, please reach out to confirm. Exempt companies, dividends are not taxable. So again, depending on where you're sitting in this space, if you're providing payroll services for a company who is an exempt company, then their dividends are not taxable. So there are separate rules. One of the documents that I find really helpful, and this is found right on the government's website, are the Payroll Tax Guidelines. So there's some guidance notes. They're not long, they're only a 10-page document, and they do kind of go through some of the things we've just talked about. So what constitutes a deemed employee? It goes through dividends in quite a lot of detail, and it really also talks to avoidance measures, because again, we get a lot of questions about, well, what if I have a business, but it's owned by another business, and then that business has a holding company, and kind of these more complicated structures. That deals with some of those scenarios to really start talking about where there is tax planning versus where there are structures which might be considered tax avoidance. And so there's some good information in this in these guidance notes. So I'd again encourage you, if you've got a more complicated situation, definitely have a read and then reach out to your resources. Okay, so the meat of what we want to get to, and hold on, sorry, I think I want to be here, is what makes up the amount that is due to the payroll tax office. So the two components are the employer portion, and it really is helpful if you think of these separately. So the employer portion, the rates depend on the annual remuneration of the employer and the tax class. So if you're a restaurant or if you're a retail company, there's some classifications there that would impact what rate you're paying. But the employer's portion takes all of the remuneration paid to everybody and puts it in a pot and says, okay, your rate is now going to be based on this. On the other side of this calculation is the employee portion, which is based on the employees, the individual employee remuneration, excluding shared benefits. And the rate is based on a marginal rate for that specific employee. That marginal word is really important because a few years ago, I think it was 2017, this kind of marginal progressive rate structure was implemented. And this is really where the challenge came in. So historically, there was one rate for everybody, and some note for every dollar that everybody made, 6% and then 4.75%, that amount was withheld and was paid on to the tax commissioner as part of this calculation. But as I said, kind of 4 years ago, this marginal progressive structure was put in place, and it does get really hard to calculate this, because it's super easy if you're employee or you earn less than $48,000 a year, there's one rate. But the minute you kind of earn more than 48,000, there's a rate for that first 48, and then there's another rate for every dollar above, and it becomes this really blended, challenging approach. So do not fear, because good news. The Office of the Tax Commissioner has developed these calculators which assist with this very complicated calculation, and it does make both the calculation of the deduction along the way as well as the quarter-end tax filing much easier. So this is the tool that we're going to actually spend quite a lot of time on today. And I think everybody's heard me tell the story of, when this system was put in place and just wanting to cry constantly because it was so complicated. And then the tax commissioner published these calculators, and it is a game changer because it just takes all the complication out of it. And just to go back one step, because I do keep skipping ahead a little bit, we also want to just note that the tax year follows the government fiscal year. So it runs from April 1st to March 31st. So the tax quarter that we're actually filing on April 15th is for January to March, which is the last quarter of the fiscal year. So the other thing that I actually really want to do today is we're going to be closing out the tax year, but then we also want to make sure that we're in good position for the upcoming tax year, because it is essentially a clean slate to start with. So we'll be talking about that with the calculators, kind of how to use the current years to close off, and then how to start a new calculator for your April 1 and ongoing next tax year calculation. So that government fiscal year is the way to think about your annual remuneration, as it is between April 1st and March 31st. And I've just got here, pro tip, know the difference. This trips up the best of us. So when I say to people, well, how frequently do you pay your people? Weekly is easy, monthly is easy, but to know the difference between semi-monthly and bi-weekly is really important, because there is a difference. So semi-monthly is twice a month, which means that there will be 24 payments throughout the year. Bi-weekly is every other week, which means there'll be 26 payments throughout the year, and that can actually have a pretty big impact. There's a 2-week difference there. So really understanding the frequency of your pay is really important, because it will decide what calculator you need to pull down and populate for your tax calculations. Okay, the other thing, so I'm not going to go in depth on a lot of the rates that we just talked about. So for some, in many instances, just as we step through this, some of those rates will pop out. The calculator, again, takes you don't even have to think about it, because it'll do it for you. And then on the employer side, when we get into the portal, that will actually help, because depending on the remuneration that you put in, it will set the rate for you, so you'll know where you sit with that. I would encourage you, though, to really make sure that you understand if you are eligible for any exemptions. So I mentioned restaurants. There's periods of time where they are always, there are periods of time where they are, that they have exemptions under normal circumstances. And certainly there's been some additional exemptions issued with the COVID restrictions that have been in place, particularly for restaurants. Retail companies, between January and March is actually a tax exemption period for retail companies. For the employer portion, in that instance, though, you do need to make sure that you are registered as a retail company, which is, I think, the definition of that is that more than 50% of your sales are directly to customers. That classification is set by the Office of the Tax Commissioner. So you can't just say, okay, Abacus is now a retail organization and I can take advantage of that. I would have had to have been registered with the Office of the Tax Commissioner as a retail company. We also wouldn't pass that test. But knowing what your exemptions are so that you can really make sure you're taking advantage of anything that can really assist is good for you. There's also some other ones that you might want to work with the BEDC on, As far as startup businesses, there's some exemptions for that. Or if you're an employer in the economic empowerment zone, again, there's some exemptions for that. But for both of those, you do have to register with the BEDC, and they would assist you in getting those exemptions. So just wanting to make sure you know what you're eligible for, because every little bit helps. Okay, so we are at this point going to start talking about the calculators. So I just want to show you where to find those. So back on the this one, the government website. So we've put in Payroll Tax Bermuda into a Google search. It's come up with this particular link. Over here in resources, you'll see a link for calculating payroll tax for the period April 1st to March 31st, 2021, which is the, like I said, the fiscal year that we're in now. So if we follow that link through, it will actually, sorry, we follow that link through, which I had done, but I can't find the right tab. It'll take us through to this specific fiscal year. We're going to ignore my phone. So if it's anybody on this webinar, please hang up. And there's lots of information here. Some of the stuff we were just talking about in terms of some exemptions. There is another one for new hire relief, but that is for larger payrolls. So just again, to be aware for these things. The resources, the calculators, the ones we want to find are over here. And where I was saying around understanding the frequency of your pay being really important, this is why. So there are different calculators set up for different frequencies of pay. So we can, I think just for ease, we'll open a monthly calculator. I may change my mind on this in a sec. And it will open up a blank calculator. And we wait. Okay. So I'm just going to enable editing. So the feedback I've gotten is that these calculators seem really complicated to use. And again, what we want to do is take some of that complication out. There are multiple tabs, and you don't need to use all of them. So we'll start just on the one that actually is probably the most important one, which is the input tab. So this is actually where you're going to put data into this calculator. There are certain things that you do need to set, like as you're setting up a new calculator, you do need to put some information in. Much of this, once it's set up, you don't have to do that again. So there's kind of a setup piece, and then there is the ongoing use piece. So we'll take a couple minutes with setup, and then we'll talk about ongoing, and then I'll just circle back to setup, because again, there's the finishing the fiscal year now. So you need to have a calculator through March 31st. And for those of you who haven't used this yet, that's fine. Again, we'll figure out how to set that up for this fiscal year together. But then there is this opportunity to say, okay, great, now I know how to do that. I need to set up one for next fiscal year, which starts on April 1st, 2021. So we want to have two at the same time. I did want to mention, so before I forget, at this point, the calculators for next year have not been published, but there haven't been any changes in rates. So it actually would be perfectly fine to use the calculators that are published on the website right now for your April 1st go forward calculators, because again, there's no change in rate. So it's really just being able to use the same ones. So we've opened this calculator and we've gone down the bottom to the tab. So we're going to go to Schedule A Input. And then there's a few pieces of information which are required. And so I've opened a monthly calculator, which is a little bit easier. And I will maybe open the weekly one just to show you what that looks like, because that one could be a little bit more complicated in terms of dates. So for most monthly payrolls, it usually pays from the first of the month to the end of the month. The pay date might vary, but the pay period would be for the first month. So the first pay period start date, and again, remember we're starting with an April 1st fiscal year, is I'm just going to set that. I'm going to set that to be April 1st. So I'm telling this calculator that my fiscal year for my monthly payroll started on April 1st. And the current month end date Now, right now, we're in March. So what I'm going to do is actually pick that as my date. But this calculator is for 12 months. So when I entered the month end date here, it opens up all of the months in this fiscal year. If I had picked just 1 month, and so I said my start date, or sorry, my month end date is April 30th. If I did that and I actually clicked the button properly, it blocks off everything beyond April 30th. So at this point in the year, you're going to be wanting to open the whole calculator because we actually need it open for the full fiscal year. As you're using the calculator throughout the year, you only want to have the month end date set to whatever the current month end date is, because this actually impacts the other views. And I'll show you what that means in a minute, so don't get too caught up in that. But that you do want to be using this calculator throughout the month or throughout the year as well. For monthly paid salaried people, there will be very few changes. So if the person was there at the beginning of the year, they're there at the end of the year, they have a salary that did not change, they didn't have any unpaid leave, just nothing changed, you'll find that their deduction remains the same throughout the year. And again, that's a very simple approach. However, in real life, there are changes. So last year we saw layoffs and suddenly people had periods where there were no wages or salary. There was unpaid leave for a variety of reasons. There were people coming and going throughout the year. So with that, you really want to be using this calculator throughout the year to make sure you're getting the deductions right throughout the year. And then you start digging into kind of the weekly paid, variable pay, hourly paid or commissions, all of these, kind of changes. The more you're using this calculator and putting that information in on a regular basis, on a weekly basis, as you're doing your payroll, you'll have the right deductions ready so that you're not having to make adjustments, because that's something that's actually quite important. The tax commissioner really kind of drills down on the fact that it is the employer's responsibility to do the deductions correctly, not to kind of, I don't want to say wing it, but I've seen some instances where people kind of do an average and then they true it up at the end of a quarter, and that's not actually allowed under the legislation. It is really your responsibility to make sure that your deductions are being done correctly, and that there aren't these large true ups at any point. So that was a lot. Just to go back. On the input tab, we've identified what our first pay period start date is. And in this instance, it's going to be April 1st. We've also said what our current month end date is. And for the purposes of illustration, we're going to say this is April. This first date, once you set the first pay period start date, you don't have to adjust that again. That will remain the same throughout the year. You will be changing the current month end date throughout the year to be whatever the current month end date is. And then we move down into kind of this other input. So these blue, wherever you see a blue box, that is actually an input field. So I cannot adjust this last period pay end date. It's actually being set by the calculator, and it's not blue, so I wouldn't expect to be able to put information in there. But anywhere where it's blue, you are able to enter information. There are some required fields here, so it does require there to be a staff name. It doesn't have to be their full formal legal government name. You can have something, you can just have their first name. This really, at the end of the day, needs to be a useful document for you. Having said that, this also is the document that if you do ever have to submit a revised return, or you have a query with the tax commissioner, they will often say to you, please provide your calculators. And in which case you do want to have the right names of people. But again, it doesn't have to be their full with their middle names and whatnot. It just has to be something that's unique. So if I just put test there, I said it has to be something unique. So if I then name my second employee test, it's going to pop out an error. So it's going to say this name already exists. So if you have two employees named Lucy, you're going to have trouble because it's going to say this is the same person. If you have Lucy C and Lucy be, it recognizes that those are unique. So when I say the name here has to be unique, that's what it's looking for, is it for just to not be exactly the same as another name on that list. Staff number is not actually required, so you don't actually have to have anything in that field, but you do have to have a start date. The start date can either be their actual, let me reframe that. The start date, what this is looking for is if this person worked on the first day of the fiscal year, which we now know is April 1st every year, first fiscal day, if they were employed, then whatever date you have here for first period start date is the date you're going to have here. So if they were employed on April 1st, then you are going to have April 1st. We are going to copy this. Hold on. I can never remember what format it's in, so you can also copy. So I just went here and did the copy, and then I did the paste. There's nothing like being live and not being able to remember a date format. So thank you all for bearing with me. So you're gonna have the start date. So both Lucy's, actually, let's just make this exciting. Lucy C worked for us on April 1st. Lucy V joined us on July 1st. Now I gotta remember what date we're gonna put this in. So we're gonna, so the 2 dates, and it actually tells you here. So if you're finding that this is a lot of information and you're getting confused, most of it will remain, or you can find it right here on the calculator. So it's either they were here on the first pay period start date, they were here on April 1st, or they joined us after April 1st, in which case you use that date. Employment end date. This sounds really obvious, but it's my job to ask obvious questions. We will only be putting an end date in if the person actually finishes. So that sounds obvious, but the other thing is if the person finishes, you do need to put an end date in because it actually changes the way the calculator calculates things. Okay, so we right now, and we will put somebody in here, but me. I was here on the 1st, but then I finished on in May, and we'll be able to see what that looks like. So starting with our simplistic calculator, we are going to assume that each of these people is paid the same amount per month. And I'm going to try and pick something that is higher than $48,000 a year so that we can see what this looks like. And actually, I'm skipping ahead a little bit. Let me just slow down a sec. There are 2 columns here, recurring and one-off or one-time. Recurring is anything that is paid every month. So anybody's salary, wage, anything that is paid on a recurring basis will go in this calculator and in the recurring column. Because again, it impacts the way that the calculator calculates it. And without going all the way deep, what it is attempting to do is figure out what someone's annual salary is going to be so that it knows what tax bracket to put you in correctly. So if we put in a $6,000 recurring amount on the first pay period, it's going to multiply that by 12 and say, okay, this person is going to make $72,000 a year, and I now know how to calculate the tax. If we put that money, that amount in one time, it holds just as that one-off payment, and it says, okay, this person is going to make $6,000 for the year, and it calculates the tax much lower. The problem with doing that, because you'll actually end up at the right place at the end of the year, but the problem with not doing it correctly along the way is it means the person's deduction is going to be very, very low, and then it's going to suddenly skyrocket when it gets to over 48,000. It's going to say, oh wait, I didn't realize this person is making all this money, and it's going to really jump, and that is going to upset your employees. So we want to try and make this again as smooth for everybody. So just to go back, recurring is anything that occurs on a recurring basis. So a salary, a wage, even if it's hourly, if someone is paid on a regular basis, that's a recurring component. One-off or one time really is a one-off payment. So an annual bonus is only paid once a year. That's a one-time payment. If you have infrequent payments for something, those would be one-offs. And what happens is those get then added on to the recurring amounts for the calculator to come up with the annual payment. If you have questions about that, pop them in the chat, because I don't want to keep going on about it if it's something, if it's becoming obvious. So in this instance, we're just going to say that Lucy C makes $6,000 a month, Lucy V makes $7,000 a month, and I make $8,000 a month. And then now we've got some data in there that says this is what we made this month. We are then able to, there's two other tabs that we'll be using on an ongoing basis. The other tab you will be using is the monthly output. When I open the weekly calculator, you'll actually notice that that one says input, weekly output, and then quarter output. So depending on the pay frequency of the calculator that you've chosen, it'll change the description, which again sounds obvious, but just in case you kind of say, wait, this doesn't look right. This is the monthly calculator, so we're going to see something that says monthly output. So right now I've got my view showing first period start date of April, current month end date of April, which is 1 month, which is what we see open for the data input. If I go to monthly output, I'm going to see the view as of April 30th. And what that shows me is what the deductions are for this month. So Lucy C should have that much deducted, and I should have that much deducted. You'll notice that Lucy V does not have a deduction, and that's because her start date isn't until July 1st. So our example is a little bit weird because we're doing April calculation that I've got a start date in there of July, but it actually helps you to understand that if you look and you don't see a calculation for somebody, go and check their start date. If there was, just to illustrate actually, if there was no start date there, similarly, there would be no start date here, but you would not see a number here. So if I didn't have a start date next to my name, and I go back to this monthly tab, you'll see my deduction goes away because the calculator says, okay, this person doesn't work here yet. So you really want to make sure that you've got these dates in here correctly. So monthly output, here's the monthly deduction for April for both of the two people who work here currently. If we go back to the input tab, as we change this current month end date, and I am going to skip ahead to July, and it opens up my 3 months. If, and I'm just copying and pasting so that we can get a calculator going here, because in theory, you'd be doing each of these each month. As you change this date, it changes both the view of what you see on your input tab, but what you see on your monthly output tab. So right now, I've got this open through July 31st. If I go to monthly output, I'm going to see July 31st there, and I'm going to see the deductions for this month. And again, Lucy V looks very strange. Why does she look so strange? Because I've got her here starting as July, but I've got her with salary in April, May, and June. So the calculator's saying, okay, we're going to charge tax on all of those months. So I shouldn't have had salary in there for her. So now that I've got her just with a July amount, if I go back to my monthly output tab, we're going to see a much more normal looking deduction. So what's going to look normal, you'll start to figure that out as you build this calculator. So if, you know, where we just saw two people who are not making that much of a difference in salary, and suddenly there's a huge difference in their tax deduction, have a think. Something's going on here that doesn't make any sense, because the calculator is calculating based on what we're putting into it. So we also want to make sure we're really putting in good info. And then here we're seeing me, and it says leaver. So there is no deduction in July because I had told the calculator I finished at the end of May. So what's also interesting with that is similarly, I had put in salary. I love that I keep saying for me, but for me, for June and July, it cuts off. It says, I don't care what you put in the calculator. You've told me this person finishes at the end of May. So I'm not calculating tax after that date. So again, you want to just make sure that what you're putting in here makes sense, which this one doesn't. If you were using this along the way, you'd be using good data. So you'd know what you're paying your people, who's coming, who's going, to be able to update this correctly. So me doing it on the fly probably isn't, or it is helpful because it's popping out the challenges for you to go and have a look at. So just to kind of tie off our simplistic salaried example, we've got 3 people. We've got some people who joined, we've got some people who left, we've got some people who've been consistently there. If we had, and actually I guess just to show the one-off, right now in the monthly for July, Lucy C is showing a $249.99 deduction based on salary. However, let's just say for argument's sake, she also got a $2,000 bonus. If I now go to monthly output, it's going to correctly adjust for that additional payment that she got for the deduction. And let's just move on to August for a sec. It should open another column. And we're going to assume she's back to 6,000 and Lucy is at 7,000. If I go to monthly output for August, Lucy is back to her $249.99 regular deduction based on her salary. So that you see where the calculator is able to say, okay, something else happened here. Let me take the additional tax. Okay, we're back to normal. Let me bring it back down to where it traditionally was. So the more you use these, again, the more you'll kind of get comfortable with what looks normal and what might look a bit odd. It also helps when, if you have employees, if they have questions, you have a basis for what the deduction was. Like you have something, it's not just, well, I calculated something. There really is a basis for this is the way the information was put into the calculator and this was the output for you to be able to show them what you were doing. The last tab, again, I'll just stick with the monthly calculator here for a sec. The last tab in here that we wanted to look at, so we've talked about our input tab, which is we're putting information in, monthly output, which shows us the month we're working on, the deductions. The other one is this quarterly output tab, and this is where doing your quarterly tax return becomes so much easier. So you'll see that this has been organized into 4 quarters, and they do follow that fiscal year. So we've got the April to June first quarter. I'm gonna have trouble with my months. July to September second quarter, October to December third quarter, and then our January to March fourth quarter. And based on the information that's been input into the input tab, it's pulling it through here. So we see our staff names and then what they earned in a particular quarter. Now, right, okay. This is showing in such a way that Lucy started July, so she's not gonna show up in this first quarter section. We won't see her appear until the second quarter because she started in July, and we are gonna see me appearing in the first quarter, but then I finished in May, so we're not gonna see me appearing in the second quarter. So I, again, don't have to do anything on my tax return section to accommodate all of that because it's all been done via the input tab. It then, so we've got the person by person breakdown here and the total of their deduction for that quarter. It then summarizes it nicely for you here. And this, for those of you who have done a tax return, you'll recognize this section. For those of you who have not, you will recognize this section when we get into the portal and actually the tax return piece of this. This is the employee section of your tax return. So again, you don't have to go and recalculate anything. It's telling you how many employees you had in what bands, what their remuneration is, and then what their portion was. So this effectively does half of your tax return for you, the hard part of your tax return for you. So again, this was hugely transformational for us when this was published. So this was our nice, easy kind of monthly paid employee example. I'm just going to download the weekly calculator quickly. It's exactly the same concept. It's just more frequent. So, with the monthly paid, you're only going to update that 12 times a year. your, patience. It's probably not what I am known for, so I'm going to stop clicking for a sec. So your monthly, you're only doing it 12 times a year. With the weekly, you're doing it 52 weeks of the year. So it's just a more frequent calculation, but the concepts in it are exactly the same. As this opened, there are tabs. Now, the way this opened is kind of interesting, and just in case this happens when you open it, it's not showing all of the tabs. So you just want to go over here where this little arrow is and click back, because you really should be able to see the same tabs: input, weekly output, quarter output. Same 3 tabs, just a more frequent use. So if we go to input, we're going to need to set that start date. We're going to need to set up our employees that were working with us at the beginning of the year. We're going to need to assign their start date, and then we just need to start putting in their weekly data. The weekly and bi-weekly calculators, you do need to spend just a couple of minutes at the beginning, again, thinking about your first period start date and the first pay period of your year, because different people pay on different weeks. So we have, some people who have a Monday to Sunday pay period, and then they pay that the following Friday, or however that works. You just need to get very clear for yourself, what week am I paying, and then what date am I actually paying it? The tax system works on a cash basis, so the date that someone is paid is really important. So for example, this week, Friday is April 2nd. This week's pay would fall into next year's, or next quarter's, next fiscal year, next quarter's tax calculations, because the pay date is actually April 2nd. Even if you're paying for this current week, or if you were paying for last week, but the date of payment determines what quarter that payment falls in. So I hope that makes sense as well. And so what we want to be able to do is say, okay, current week end date, changing these dates is going to change the way the calculator presents. So, and I wish we were able to. So for example, and again, this actually works out perfectly well with this week falling the way it does. You'll notice that for this calculator, I can't pick April 2nd, 2021 in this calculator, because this calculator is for the fiscal year, April 1st, 2020 through March 31st, 2021. So it won't even let me put this week's pay in this calculator. So if we go from the perspective of someone else whose pay dates are on Friday, and I'm going to just quickly look at this should be able to tell me actually. Give me one sec. So what I'm trying to get to is someone whose pay date who pays weekly, whose last week's Friday payroll was their last pay period. If I move this forward, I think. If I change this date, you'll notice that this last pay period end date changes. And again, this is probably feeling a little bit complicated. When you go to do this for your new fiscal year, it'll be a little bit easier, because you're not trying to figure out what the last pay date of the year is. You can actually just say, okay, I'm going to be paying on Friday, April 2nd. Hopefully you guys are all paying on Thursday, April 1st, because it's Good Friday. But anyway, it's still in April. So you'll still have your date. Don't get confused with it. I'm going to get myself all in a tiz about that now. Don't worry. But if you set your pay date correctly, then your calculator will have the right pay date throughout the year. So again, let's just go with this an example, that the first pay period start date was Saturday, which means that I'm paying them the Friday, April 3rd. There's a week of pay. This means that every pay period that's going to come up from here on out is going to be a Friday. Okay, I know that was a very convoluted way of explaining this. If your pay date is always on a Thursday, then you want to pull this back to a Friday, because it calculates it based on a week. It says you're paying somebody for a 7-day period. So if your pay date's on Friday, your pay week starts on Saturday. If your pay date's on a Thursday, your pay week starts on Friday, and etc. If I have fully complicated this and confused you, pop it in the chat and I'll try and go over it again in a more simplistic way. I'm going to come to the chat in a sec because I want to make sure that if there are questions on this calculator that I'm answering, or on other things that I'm answering them. But for the weekly calculator, what you want to be able to do is say what is my pay, what day does my pay week start, and what day do I actually pay people? And then that sets your calculator for the rest of the year. Once you get the right first pay start period, then, like I said, let's just say your pay date's on Thursday. All of the dates that appear in your dropdown are going to be a Thursday date. So the following week is going to be a Thursday, and it'll be every 7 days. For the example where there's a holiday on Friday, like we are going to have on Good Friday, leave your pay date as April 2nd. Even though that sounds confusing because people are going to get paid the day before, the actual pay date is April 2nd. And so you don't want to set your calculator to try and accommodate holidays, which will be the anomaly. You want it to, you wouldn't be able to change it just for this 1 week anyway. So you really want to say my pay date is Friday or Thursday in this instance, and always have this date be that, whatever that Thursday is. Once you get your first period start date, you don't have to change that date at all. You would be changing your weekend date throughout the course of the year. And again, every time you change this date, it both changes the view in input and changes the output view, which I'll come to in a sec. You have to have staff names. So let's say we've got Michael, I have my glasses on, and Jordan. And again, this goes back to what we were saying. If this person was working for you on the first day of the fiscal tax year, then you want to just copy whatever this date is and put it in here. And in this instance, we're going to presume that both of these people were working on that date. For each week that you're paying people, you'll be coming in and putting in their wages. Wages, commissions, bonuses, overtime, whatever they're getting paid, that is remuneration, needs to get into this spreadsheet. And then you need to make an assessment of whether it is a recurring or a one-off payment. So again, wages that are paid weekly, whether they're hourly or otherwise, are recurring. Bonuses are one-time payments. So this person gets $1,000 a week and this person gets $2,000 a week. I'm gonna just copy that across so that we have a little bit more data in here. And I am going to open this up actually through at least the quarter so that we can just look and see what that quarterly output looks like properly. There's quite a lot of copying. So you see why I wanted to do the monthly one first, because it is a much simpler. This is literally 52 times more work. Okay, and so it cuts off right at the end of the quarter the way I asked it to. And we're going to have Michael get a big bonus in the middle there. So if I, again, am using this along the way and I'm changing my date along the way, you can also set this back. So if you ever wanted to go and say, okay, what were the deductions for the second week? And I'm just going to pull this back to the left. It kind of, again, blocks off the weeks. It doesn't delete it, so that information is still there, but it just does a cutoff on the view. And if I go to that weekly output tab, it's changed that date and it's showing me what the deductions were at that date. So this is quite helpful because you don't have to actually do a new calculator for every week. You can have this saved as one calculator and you can just change the view date so that you can see different views as you need to. So going back to input, here we are at the end of a quarter. And in this instance, we're casting our minds back to June of 2020, and I don't think anybody really wants to do that because that was a tough time for many of our small businesses, but let's just say we're at the end of that quarter. When we go to that quarterly output tab, you're going to see again this nice summary that says, here's the employees, here's how much they made, and here's their total deductions for that quarter. It then does the employee section of the tax return again for you in a nice summary way that says this employee earned this much, here's the deduction, this employee earned this much. I'm doing this in a very simple way. If you have 25 employees, this becomes really, really useful because it summarizes it for you, that you've got four people in this band and 5 people in this band. So again, the more complicated your payroll or your tax calculation is, the more useful this becomes. So I've just been thinking to myself, why are these people way down the page? And it's because on the input tab, I thought I was at the top, but I'm actually not. So just again, if something looks strange, it's probably because the input tab has been used in an interesting way. So my mind sees patterns. So when something looks strange to me, I have to go figure out why. So that's why. And again, the concepts are the same. So if someone leaves mid-quarter, so let's just, for argument's sake, this person left April 15th, 2020. Let me just illustrate what this looks like first. So right now we're seeing this at the 25th of June, that the deductions are just over $1,400 for the quarter. But if in fact I had put an end date in here, it will cut off the calculation as of that end date, and it will change the way that's calculating and how much is pulling through on that person. So you just want to be, again, cognizant of what dates you're using and how you're using them. Okay, so I'm just going to pop to the questions tab box, which there are lots in here. Okay. I'm going to take a sip of water, and then I'm going to try and jam through some of these. Okay. And okay, so we are, and I always laugh because there's always people who are very kind in the questions box and give good feedback. So I tell my family all the time, I work for Praise and Food. So sorry, I'm trying to make this box bigger, and it is fighting me every step of the way. Give me 1 sec, guys. Make this bigger. I've already mentioned that patience is not my strong suit. Okay, so so there was a question, is this $10,000 per tax year or calendar year? That's so this is speaking to the dividends. So the $10,000 is per tax year. So whenever anything is discussed around any of the tax rules, it's always looking at April 1st to March 31st. So that's a good question. For those of you who are tardy and apologizing, that's no problem. And thank you for coming again. Restaurant, do we terminate when they're on seasonal leave? That's a good question. So if somebody is, that is a good question. So yes, so if somebody is, that's a good question. I don't think from the calculator's perspective, and I'd encourage you to try both ways and just do some test cases, but I think you'll come to the same place. So what this person is asking is, do I put in an end date? If I know somebody's going to be off for an extended period of time, do I put in an end date? And I think, I don't know, I have 2 minds. I think if you don't put in an end date, it's not going to do a calculation. And so I don't think you're going to be in any worse position. By not putting an end date, you are indicating to the calculator that person is coming back. And I don't know that you would come up with any difference if you put in an end date and then took the end date out when they rejoin. And basically in the calculator, and sorry, you guys can't see the question box and I'm pointing at it. So let me just illustrate that. Let's actually see if this makes a difference. So let's say this person is going to work the first 2 weeks and the last 2 weeks, but isn't going to be here in the middle. And thanks for bearing with me as we test these things out. But this is actually also part of it, is just trying to figure out what the best way to do this is. So there's a big gap in the middle where where Jordan's not working with us. So if we do it that way and we don't put in an end date, there's $160 of deductions, which would have, let me just quickly see something here. So April 30th, he was not working with us. And so, okay, so it is going to show a deduction due. Then that's important to know because it's actually saying, oh, actually that's saying money owed back. Because what it's saying is you told me this person was working and then you said they're not working. So in actual fact, I think the better way to do this is if he finished the week of April 9th, to put in finished that week. And then for April 30th, you would see him as a leaver. And then when they so you would have leaver for each, like basically you would just leave it. When they do rejoin, you would take their end date out. And that's when that calculation comes back. I might come back on this one because that, I'm just going to make a note about that one for seasonal absences. Because I want to make sure again that you're getting the right information, and I don't want to spend a lot of time on one specific thing, but that is a great question. I try to, oh, so somebody's just asking about the calculators, so where those are. So let's just go over that again just quickly. So on the government's website, so if you do a basic Google search for Payroll Tax Bermuda, and which will actually, I think the first tab that opens is here. If you come down, even if you don't land on the right page, just always come over to the resources section, and the place you're trying to get to is calculating payroll tax for the period April 1st, 2020 through March 31st, 2021. And so if you click that, and then again, come down to resources, all of the calculators are here. I am expecting, again, they haven't published the ones for the upcoming fiscal year yet, but I am expecting that those will be published momentarily, because in theory, we would need them for this week. So I'm hoping that those will be up shortly. And again, we'll try and touch base with the tax commissioner to see if they've posted a link somewhere else where they're held. But that's where you're going to find them, is right on the tax commissioner's website. What about regular overtime payments that change each time? That's a good question. The team and I don't want to say we argue, but we have robust debates about this. My personal opinion is that if overtime is something that is paid every week or every pay period, I would include it in recurring, because it helps smooth out the payments a little bit. There is an opposite side. You get to the same place. I will tell you, at the end of the tax calculation, you do get to the same place, but one-offs tend to bump the tax up, your tax deduction up. I think the real answer is treat them consistently. So if you're going to call overtime one-off, always put it in one-off. Don't sometimes have it as recurring and sometimes have it as one-off. You always want to treat it consistently. Same things with commissions, because commissions can be the sort of thing that is paid every week. You can also have commissions, for example, for real estate agents, where they only get commission when they actually sell a house or whatever, and they can be really, really random. Those are one time. So you really want to have a think about the nature of what you're paying and how frequent, and then really be consistent with how you treat them in the calculator, because that means the calculator will then be consistent. So weekly paid differently every week still goes in recurring. So if we're talking about wages, yes. So even though someone's wages, or again, if they're hourly paid, they might change, you would put those in recurring, and the calculator will adjust based on whatever amount is put in there. If weekly paid, but some monthly benefits, e.g. housing subsidies, do we have to break down to weekly amounts? Some monthly benefits. So if there's, okay, and I think I understand what you're asking. So in this instance, that person is paid weekly, but then at the beginning of every month, for example, they get a housing subsidy. That I would treat as a one-time. So you would have their weekly salary in recurring, and then for the first pay period of the month, or whatever, however often they're paid, that housing subsidy would go in the one-time payment category. And again, that particular pay week, their deduction is going to be higher, and then it will come back down to just to what their wages are. What if there are different salary amounts each month? Again, salary is paid recurring. The amount might vary, so you would still put whatever the amount is in the recurring column. We're new entrepreneurs, and we pay a monthly stipend of $500. How to calculate payroll tax? Basically, that $500 is, I mean, you've called it a stipend, and this is where it gets quite interesting, because you're calling it a stipend, but it's effectively a wage. So that $500 that the self-employed person or whoever you're employing, whatever they're getting paid, that is taxable. Thank you. You're welcome. I pay myself monthly. Yep, I pay myself monthly, but the amounts change. How do I calculate my payroll tax? So for whatever your salary is, the amounts change, that's recurring. You're going to put that into the recurring column, and then you're going to look to see what the deduction should be for that particular month. For self-employed people, this always gets a little bit interesting because many of us aren't necessarily calculating a paycheck in the way we would for an employee. So we're paying ourselves, you know, kind of just whatever the net is. I'm going to take $5,000 out of the business. It's the $5,000 that you are going to put into the calculator. However, just to also be clear, if you are paying, remember we talked about with remuneration, we talked about in-kind payments. So if there is something that's being paid on behalf of an employee, that can also be taxable. So if you are, if you have health insurance and the employer is not taking a deduction, they're effectively paying your deduction, that can be taxable. So you also want to just have a chat either with the tax commissioner, or again, you can register with us to have a chat around what those look like, because there is then a difference. So the person who doesn't have a deduction is getting paid more than the person who doesn't have a deduction. So you can see why that is considered taxable remuneration. I'm a sole proprietor with no employees. Do I get taxed on the total revenue for the quarter? That is a fantastic question. So for you self-employed people, the question is around making the distinction between what your business is earning and what you are earning. So if your business is earning, let's go crazy, it's earning $100,000 a month, but you have paid yourself nothing, nothing is taxable. It ultimately, what is taxable to you is whatever you take out of your business. So if your business earns $100,000 a month and you take $100,000 a month, what you take is the taxable amount. And again, there's certain suggestions that I would have on this, which is probably a different webinar as far as paying yourself first and making sure that you're getting paid. But ultimately, what is taxable, the purpose of this webinar, what is taxable is what you take out of that business. My first pay period was back in 2000. I'm hoping that's a typo because that was 21 years ago. I'm going to hope that's 2020. So this is around, the questions around pay period start date. So if you could actually, I think I know who this is. So I think this is a monthly paid person. So if your first pay period, you're trying to set up the calculator, you're going to put in your monthly paid, you're going to put in April 1st, 2020, because you're monthly paid. And your first, let me just go there because I can illustrate better. So for monthly, I'm back in the monthly calculator. Your first pay period start date is going to be April 1st, and then your current month end date is going to be whatever period you're working on. We are aware at this point that the whole fiscal year is gone, so you can actually set that all the way to the end of the year just to open up all 12 tax periods to get your information in. Is there a separate column for overtime? I think we talked about that. I'm a sole proprietor. Oh, I talked about that one too. Sorry, I feel like these are moving around. Our employee work week is Thursday to Wednesday. They receive their payment on Friday. Please clarify how I would input start and end dates. Great. That's a great question. So the payment date is actually what we're going to call your week end date. So in your instance, they get paid on a Friday, and your start would be oh, why can't I do this in my head? Hold on, let me go to the calculator. So in your instance, we're gonna set, hold on, I'm gonna move this one back. Nope, I'm going to move this one back. Saturday, there we go. I don't know why I can't do things in my head. I can't, I count on my fingers as well, but I'm a really good accountant. So in this instance, even though your work week is Thursday to Wednesday, the fact that they get paid on the Friday is going to change what your work week looks like. And so you're going to want to have your week end date set to be Friday and your period start week to be Saturday so that you get a full week involved. Will you be required to put in an end date on the calculator if you're working by a contract for your client, i.e. self-employed? End date in the calculator. So if you're self-employed, the only reason you would have an end date is if you actually either suspend or close down the business. No, so I'm not 100% sure what you're asking there. If you could maybe give me a little bit more information, I can try and help with that particular question. I love that there's so many questions here, you guys. This is so exciting. I'm doing a great job. Thank you. Are commission payments input as one-off? And is there any difference required if the employer pays all deductions? Okay, and actually, just looking at when this came in, I think I answered both of these, but just to quickly, in case I didn't, commission payments would be considered one-offs in most instances, although it can, if they are paid weekly, like every week everybody gets a commission, it won't really matter if you include them recurring. But if there is any chance they're not going to receive them any week, then call them one-offs. And if the employer pays all deductions, then yes, if you do not have exempt, and I'm not going to come up with the right words, but there's certain, like health insurance, you can get exemptions, certain things, but if you don't have those exemptions and you're paying benefits on behalf of employees, then those become taxable benefits. So specifically for health insurance and pension. And so we can talk a little bit more about that if we need to. So do we put in for monthly as self-employed? It will vary. Yes. So if you are monthly, paying yourself monthly, even if the amount varies, I'm sorry that I'm repeating myself, but we're seeing the same question and I just want to make sure everybody gets it. That anything that is considered salary would go in the recurring salary or wages would go in the recurring column, even if the amounts change. What happens as a sole trader if you don't have work and you can't pay yourself? How does that work for payroll tax? Again, you're only taxed on what you pay yourself. So in the instance where there is no payroll tax, or sorry, no drawing, then you wouldn't have anything in your calculator and it should come up with a zero. But this also speaks to kind of those seasonal absences, which I do want to get a really good question or answer for you guys. I want to figure out if you need to put in an end date and then reactivate yourself or how that works. So that is a good question. That I'm not sure that I have the full answer to quite yet. So as the dates we are locked, we cannot use the existing for next year. No, so that's true. You can, we in theory, we can actually use these calculators for the upcoming fiscal year, but the dates won't line up. So you're gonna probably end up frustrating yourself a little bit. So either hold off until the tax commissioner publishes the calculators or we find them. And then set them up correctly with the right dates, or you can kind of bluff the system. So again, if your pay date is Friday, you can use this calculator and have the first pay date be Friday the way we have it set up, but the actual date just won't display correctly. It'll show as April 3rd because last year that first Friday was April 3rd, whereas this year is going to be April 2nd. So if we're not able to get the calculators in time, then use the ones that are available and just be aware that the dates are going to be a little bit off. If your company pays your social insurance and medical for you, that's considered a benefit, correct? Yes, that is correct, unless they have an exempted plan. The payroll taxes for 2021-22 should be the same as last year. Yes, and I was going to say thank God, but thank God there have not been any rate changes. Which is why we'd be able to use these calculators. And hopefully if you guys have been using or if you've gotten more comfortable with payroll tax returns, there aren't any major changes. So we really should be able to get into a bit of a groove with this. Do you add the benefit into the total remuneration amount inputted? Yes, but I would consider those one-off. So they're not even, well, I guess there's two ways to think about this. I generally put them in, so if you're the, if your employer is paying, you're going to slow down because I'm answering questions and my brain's going 1,000 miles an hour. If your if you as the employer are paying benefits on behalf of an employee, you would include, like I said, if they're non-exempted plans, the employer portion, other way around, I'm so sorry. If the employer is paying the employee's portion, you would include the employee's portion as a taxable benefit. And I usually put those in as one-times. Okay. I'm a new business. I'm not paying myself yet, nor taking dividends in this quarter. What do I submit? That is a great question. So, okay, this is a great question, and I'm sorry I didn't address this, and I'm going to make notes for future webinars, actually. So, what happens if your business was shut down? And again, we had instances of this last year, or there wasn't enough revenue to pay yourself or whatever those things are. Then what you want to do, you do still have to let the tax, if you are registered with the tax commissioner's office, you have to let them know that you're filing a no return. If you are using the portal, which we're going to get to that next, that's our next topic, then there's actually the option right at the beginning to say I'm filing a no return. And what that does is says to the tax commissioner, there was no salary, there was no remuneration, I don't owe you anything, but I'm telling you this. If there are more than 2 quarters of no returns, the tax commissioner basically says your business is suspended. Not in a punitive way, but you know, this looks to us like your business is suspended, and in which case you need to file a suspension with them, and then you don't even have to file a no return. So if you are not earning enough to pay yourself, you want to make sure that if you're registered with the tax commissioner that you file a no return. Hopefully the next quarter you've rebounded enough, not hopefully enough to pay tax, but hopefully you've rebounded enough that your business is actually doing well enough to pay yourself. And then you just get back into the filing cadence. If you, like I said, if you have more than 2 quarters of no returns, then you really should consider suspending, which is a link. I can actually find that for us quickly. There's a link on that very first payroll tax Google search page that comes up. There's a link over here in resources, which is registering, changing, or closing a tax account, and that you come down, change of status form is how you can suspend with the tax commissioner. So that is a great question, and thank you for asking that, because you will, if you do not file a tax return, the tax commissioner doesn't know why. They don't know that you didn't make enough, and you will actually get an assessment. You'll probably get a letter that says you owe us money, there's penalty, blah, blah, blah. So just remember, you always have to notify them if you are not going to be filing a return that you're filing, that basically you're filing a no return. Oh, thank you. So there's a comment here that says the website recommends including salaries, commission, and overtime as recurring. So it is interesting, and I don't want to contradict anybody. When I had done a tax webinar or a tax one of these with the tax commissioner, there's been robust discussion around this. So I'm going to stand by what I said as far as commissions and overtime. If they are not paid on a regular basis, I would not include them as recurring, because it will impact the way future calculations are done. Having said that, what I'll keep saying, and I know it's without understanding what the calculator is doing behind the scenes, it will come to the same place. So what it does is it just impacts how high a calculation or a deduction is along the way. But then both of, whether you call them recurring or one-offs, as long as the person stays with your company, at the end of the fiscal year, you'll actually end up in exactly the same place. So there isn't a huge problem if you don't get this exactly right the first time. And that's what I want to also really encourage you guys on as well, is get in the habit of using these calculators, because then the impact of the decisions you're making will start to become more obvious to you, and you can say, okay, that didn't work the way I wanted it to. Let me make sure I get this right. What if a company pays for employee training? Is that deductible? Is that deductible? I think you're saying, is that taxable? So no, it used to be, but it is not anymore. So training is no longer a taxable benefit. Okay, I've invested thousands of dollars to start this business and I'd like that back before I take any remuneration. How does that work? That is, again, a great question. That is different. If you have loaned the company money, so you've invested personally, that should be set up on your books as a loan from the owner. And as you make payments, it should be deducted as loan from owner. And it is not taxable. What I would strongly encourage you to do, though, is make sure that it's recorded correctly in your books, because if the tax commissioner does come and say, what have you paid yourself? And there is evidence that you've paid yourself thousands of dollars, you need to be able to support the original payments that you made on behalf of the business that say, I'm paying myself back. So you always want to make sure you have good accounting records. And I'm just smiling because that's what I do for a living. So just make sure you've got your documents and your support for that. But any money that you put in as an investment absolutely can be paid back. Or sorry, as a loan can absolutely be paid back, and that is not considered remuneration. That is just paying back a loan in the same way you would as if you had borrowed the money from one of our financial institutions. Where do we put in dividend payments, or do we deduct the first 10,000, or does the calculator automatically deduct it? Great question. And I'm going to come back to that. Well, two things. So I'll show you how to use it in the calculator. And then we're going to flip to the portal, because I'm not even putting a dent in these questions. I love it. And I'm getting distracted by the questions. Dividends. So and we'll just go to our monthly paid people. If, for example, let's say Lucy C is the owner, and at the end of the first quarter, she gets a $20,000 dividend. What you want to put in the calculator is the taxable amount of that dividend. So we covered that for each shareholder, for each fiscal year, there is a $10,000 exemption. So with this $20,000 dividend, Lucy can elect to either take the full $10,000 exemption in this dividend. If those are regular dividends, she may decide to split that up amongst the year, just again to kind of smooth out what her next dividend payment might look like. So you can elect to split that up over the course of a year if you want to. You just can't take more than $10,000 of exemption. So let's just say the company has declared a $20,000 dividend. Lucy says, nope, I want my full $10,000 right now. You're going to put the taxable amount, which is going to be $10,000, into the calculator. I hate when I do things that divide by 2. So let's just make this example a little clearer. The company is going to declare a $30,000 dividend, of which $10,000 can be exempt. $20,000 is going to be taxable. And then for her, at the end, whatever date it's paid, let me just put it in at the end of a quarter so we can see what that looks like. You would put that in as the one-off, just the taxable amount. When we get to the portal, there is actually a section for dividends, which you would put all of that information in. So you would say there's a $30,000 dividend declared. We're taking the $10,000 exemption, so therefore $20,000 of it is taxable, and then that's where your portal submission lines up with your calculator. So again, if the tax commissioner ever says we need to see your records and you submit the calculator, that there's an alignment. So hopefully that makes sense, that only the taxable portion of your dividend will go into the calculator, and it will go in as a one-time payment on the date of payment. If you overpay, do you get a rebate? You do not. So if you overpay, then you will have a credit sitting on your account with the tax commissioner that can be applied against future tax payments. As a part-time business, I'm the sole employee. I don't collect each month. Is this considered seasonal retail? If you don't collect each month, then yes, you're going to fall into this question of kind of the seasonality of change. Whether or not you're retail, though, is a question of what kind of business you're in. So are you selling more than 50% of goods to consumers? And if so, are you registered correctly as a retail company with the tax commissioner. So I want to just separate those out because there's seasonal and then there's retail. So there's two different things happening here. So whether you're retail or not, you have to figure that out and just make sure you're registered correctly with the tax commissioner if you are. And then the seasonal question, and I really should know this because we had so many people unpaid last year, and I'm sorry that I really want to get that right because you want to make sure the calculator is doing what you want it to do along the way. I am going to send that out as a follow-up subsequent to the webinar. If you file in time but make a mistake, do you get fined, or is the OTC lenient? This is also a good question. And I'll cover this a little bit. I'm going to cover that later, actually, because we're going to talk about fines and penalties. So I want to make sure we get through everything. Okay, sorry, this is a long question. As a self-employed person, even if I don't pay myself, they said that health, etc., that the company pays for is calculated in the tax calculator, i.e. a portion is added as an employee and the remainder is employer. Didn't make sense to me, but I followed their instruction. Okay, so yes, so this is where I was saying for self-employed people, well, and for self-employed people or for employees who don't get deductions, you're going to actually, let me be clear here. For self-employed people, for anyone that doesn't take a deduction, whether you're self-employed or an employee, basically what the tax commissioner is trying to get to is what is your actual compensation. So if I, as an employee, am paid $1,000, but I have $400 of deductions, that is one situation. If I have an employee and paid $1,000 with no deductions, I'm making more than this person. And so to tax them the same would not equate. So if you're a self-employed person and your business is paying your health insurance, your pension, et cetera, and you don't have an exempted plan, then that would be part of your compensation amount that you would include in the tax calculator. So thank you for that, because that is an important piece. Are gift cards considered remuneration if the company were to purchase a gift card at Marketplace? Is there, technically it's taxable. So basically what they're saying is instead of giving them $200, you're giving them $200 of gift card. So it is taxable. It is a benefit that you're paying on for them. For example, consultancy, oh, I see, this is a follow-up to earlier. Okay, great. Consultancy works for different clients. Will each contract start and end date be required to be inserted in the calculator? No, because for a self-employed person, the tax is not based on the revenue of your company. It's based on what you as the employee of your company, and this is weird when you have to consider yourself both the employee and the employer, but these are the hats we wear. So you would be in your calculator, you would have your name, and presumably you were employed by your company at the beginning of the start period, and then you would put your remuneration in along the way. So if there were a variety of contracts happening, and let's just, again, for argument's sake, say everything your company makes you pull out, then that is your remuneration. If these contracts are paid to your company and you're paying rent or an electricity bill or office supplies or all of the things that a company pays, and then you take out a certain amount of money, whatever amount of money you as the employee of your company are being paid is the amount that's taxable. So hopefully that helps. Oh boy. In regards to one-off for commission deduction of insurance, and payroll is calculated what's paid, say, every 6 months to coincide with commission received. Okay, let me read that one more time. In regards to one-off or commission deduction of insurance, and payroll is calculated when it's paid. I'm sorry, I'm not understanding what this question is asking. So if you don't mind to resubmit it, I'd be happy to think about it again, but I'm not sure what is being asked there. Can you say if the payroll tax due date for the quarter ending March has to be paid by April 15th? Oh, great question. Sorry, sometimes the real basic stuff escapes me. So payroll tax for the prior quarter is due by the 15th of the following month. So right now we are working on the January to March quarter. So remuneration paid between January 1st and March 31st will be calculated and is due by April 15th. And then that rolls for each subsequent quarter. So then April 1st through June 30th is due by July 15th, et cetera. So It is the quarter then due by the 15th of the following month. So as a sole proprietor, when you say only pay taxes on what you pay yourself, does that include using funds to pay personal expenses or not? If a business owner part-time, right, okay, so this is where I'm going to actually take my tax hat off and put my accounting hat on and say to all of you self-employed people, all you sole proprietors, please, please, please separate your business and your personal expenses. It really is accounting 101, and it actually is critically important for being able to identify how much your business is paying you. So if you have everything in a personal account and you're trying to separate things out, or your business is paying all sorts of your personal stuff, or you as a personal are paying all sorts of stuff on behalf of your business, you see where that gets really messy. So sort of the easy answer is if you keep a set of business books, anything that you are paying personally is reimbursable to you, non-taxable. So if you've paid for, again, you've gone and bought a pack of paper, the company will pay you back with no problem. That's not taxable. But it does get really messy if you're trying to calculate, well, I paid for a pack of paper, but then the business paid for, I don't know, my car insurance or whatever. So you really, really, really want to separate the two out. Again, that's a different webinar, but I can't urge you guys enough. Keep really good sets of books, because it helps with this, but it also helps you know where your business is, which is really important. Again, different webinar. I should do these every week. I could not do these every week. Okay, what else here? All nil returns must be with an explanation. Yes, okay, and that's actually really important. I think their full name's not there, but I think that's somebody here from the tax commissioner, so I'm really glad you're here. So nil returns, that is a great point. So you really want to be able to say, again, last year there were a lot of nil returns filed around this time of year because we were in shelter in place. Businesses just weren't functioning. So the ability to say I'm filing this nil return because we had to shelter in place and I wasn't able to conduct business is important. So any nil return must be filed with an explanation. I'm very glad you're here. Started January 21 being paid monthly as a freelancer. Paid monthly, do we put in the monthly rate? So for January to March, do we put in for monthly as self-employed, as it will vary? Yeah, yep, so sorry, and I think I've answered this a few different times, but just wanting to, let's be really clear. So if you are paying yourself monthly, whatever amount you're paying yourself goes in the recurring column, even if it varies. If we miscalculate, have to adjust, I've answered this one. So is the overpayment? No, the credit stays on the account and you would deduct it from your next calculation. My screen keeps changing, sorry. And I'm gonna take this as the last question for right now, because like I said, I wanna get to the portal. In the payroll tax return, section O, number 8, payroll. Okay, so this is actually speaking about the payroll tax return. So we're gonna hold off on that question for a sec, because now we're actually gonna turn attention to the payroll tax return and how that's gonna get correctly input. So again, calculators, get them set up. You wanna be using them throughout the tax year so that you're getting your deductions correct, your employees or yourself are getting paid correctly, super important. It helps as you're then, for each quarter, it's building your data to do the tax return. So, that was a lot, hold on, one more. So we've talked about in the calculator, one sec. Super important, didn't talk about saving it. When you download it from the tax commissioner's website, save it. While you're in there, you've got your calculator, come up here to file and do save as, and save it somewhere. Save it to your desktop, save it somewhere safe, but that you can keep coming back to it, because you don't want to have to keep setting this up over and over and over. You want to do that setup once, and then you want to make it nice and easy on yourself. So please save them. So actually have these backwards, sorry. So setup, select and download the appropriate calculator, select Schedule A input tab, select the start date, end date, i.e. date funds are paid, enter staff names, enter start date of the first pay period, save. These slides are being emailed out. So, for those of you who are a little bit worried, this is the summary of all of that stuff that I've just been talking about. Big long download, not a lot of steps. Once they're set up ongoing, you're just going to open the saved calculator, go back to that input tab, update your new end date, add any new employees, and ensure their start date is entered, add any end date to employees that terminated, add your recurring and one-off remuneration, get your current deductions, and then we're going to use the quarterly output. So that is where we are finding ourselves now. So the tax portal. Okay, let me just look at my notes and make sure I haven't missed anything that I did want to talk to you guys about. No, I did not miss anything. Okay, that's good. So, oops, let me just move the questions back out of the way. So the tax portal. So I would strongly encourage anybody who's not e-filing, who's not actually using the tax portal. Super, super important. It's super easy. It helps you get it right. You are able, it keeps a copy of all your prior tax returns on there. So, and your receipt numbers. So if you, the banks right now are asking for your tax commissioners, a letter from the tax commissioner. You actually don't even need to get a letter from the tax, you can, or, you go to re-register a car, a business vehicle, and they want your tax receipts. This is all stuff that you can then just go grab, and it's within your reach. There is also, you can see all of the returns, the dates that they were filed, the amounts that you filed, the amounts that were paid. So if there's ever a discrepancy there, there's just a lot of good information in there. And I've just found it to be a godsend. What I am also finding is that the tax commissioner is starting to make it mandatory for, and they've started at kind of the top tiers, but certain, where the remuneration of the company is over certain bands, they have to file using the portal, and we're starting to see where they're rolling that out. So I do suspect at a certain point this is going to become mandatory, and I'd really, really encourage you guys to utilize the technology. So it does require a website and a computer, which I'm assuming, because everybody's here on a webinar, you have some sort of access to, but it does make things much easier. So for those of you who are not registered, we're just going to take a minute and quickly walk everybody through how to register. And there are 4 steps. So you're going to go to www.etax.gov.bm, and you're going to see a screen that looks like this. You're going to put your payroll tax ID number here in this employee account number field, and you're going to hit the register button. And that's it. That's registering. Super easy. And what will happen, it'll then take you through a couple more steps and ask you to put in your name and what email address you want to use. So I'm sort of fibbing a little bit. There's another step, but it really is, it's pretty straightforward. And then OTC is the Office of the Tax Commissioner. They will actually email you your logon information, and that just takes a couple of days. So it's super, super easy. And once you have that password, you're able to get into the system. The other thing you're going to want to do, so that just gets you into the portal. Once you're in the portal, you want to register to be able to e-file your taxes, so to pay them through the portal. What you're going to do is, once you're in there, you're going to come in here, and this is the way the screen looks basically. And so there's these different tabs, and I'll go through the navigation of that in a sec. But if you come down here to this payroll tax EFT authorization form and download that, it basically says, I authorize my bank to allow the tax commissioner to withdraw these funds from a certain account. What it does not do is allow them to just go take the money. So that is not what this form is allowing them to do. But what it does, and again, we'll get to this screen, when you go all the way through setting up your tax return, then you click an e-file button. It actually asks you to confirm that bank account information. It has to match what was submitted to the tax commissioner's office, and then it will allow a direct debit. But at no point is the tax commissioner going into your account and just taking out money. You have to file the return, you have to e-file, you have to hit the e-file button, you have to enter a bunch of information in order for them to then be able to take that money. So just to give you some reassurance that this is not giving them carte blanche access to your bank account at all. It is just setting up an authorization for you to be able to to pay via the tax portal, which again makes life so easy. So you want to do two things. You want to register to be able to file online, and then you want to get that EFT authorization form sent into the tax commissioner, because that's what then allows you to pay, which again is the power of the portal. So once you're registered for the portal, the screen you're going to see, basically these are menus up at the top. So you'll see payroll tax return, which we're going to deal with in a second, because that actually takes you to a new return and allows you to file. View returns, so you can see all of your past tax returns. Amazing. You can make payment on account. So if you are behind, or you're on a payment plan, or whatever those things are, you can make additional payments again on the portal. You don't have to muck about or go stand in line or do any of those things that nobody wants to do anymore. User maintenance is your profile, so you set up kind of the contact information, and it also helps to auto-populate some of these forms to make it really easy. Passwords, if you want to change your password, contact them, or log off. So there's, again, these are menus. So we're going to spend most of our time here in the payroll tax return. And it then will ask you a series of questions that, based on your answer, affects what screens you're going to see in the actual portal. So just to step through those, and again, you can tell that I'm in a local profile. So there's not a generic thing. If you're exempt company, this is going to show up a little bit differently, but I've used, I think I actually used the Abacus profile just to be able to illustrate what these boxes look like. So it's going to ask you, do you have employees or not? Are you self-employed? Do you have both? And that will impact what screen you see later. Do you have people earning in excess of 900,000? The answer to that will impact what screens you see later. Do you have employees in special circumstances or Bermudians on approved training schemes? Again, for your specific instance, you're going to answer yes or no to whatever's happening here. What tax period are you filing for? This will usually default to the current tax period. So right now, if we log in, we should see the January to March button defaulted. You just want to make sure you're in the right period. And then what is your remuneration for the quarter? Now this is for your company. So if you are self-employed and you've paid yourself X, you're going to figure out where you fall. If you have employees, you have to figure out what your total remuneration is. And if you are using the calculators, your total remuneration is going to be found on this quarterly output. So, and again, we haven't put a lot of information into these things, but the total remuneration for this this company is $6,000. That's on our weekly calculator. If I flip to our monthly calculator, the total remuneration for this company is $54,000. So you see where using the two together really can start to make a difference. I've come out of from current slide. Okay. Sorry. So where you set this remuneration level will impact what tax rate is going to be calculated on your employer portion. What I will also tell you is if you select something here and it doesn't align with the amount that you put in the portal, it's not going to let you continue. So there are double checks that are put in place. So I can't say 50 to 87.5 here and then put $1 million into the portal. So it won't let you do that. There are some quality checks that happen with that. And then if your employees are paid more than once, how many paydays are covered by the return and the date of the last pay date. And again, you'll see this, these are all individual screens. There's a couple of questions per screen, so not too complicated. So this should look very familiar to anybody who's done a tax return before, whether you've used the portal or not, because this is modeled right on our tax return. It's the same form, it's just now online. And this is where it is looking for you to put your information in here as far as your monthly paid and weekly paid people. Something else I didn't mention, if you have, we kind of talked about the scenario of we have monthly, here's the calculator, we have weekly, here's the calculator. There are companies who have a multitude, and so they pay some people monthly and some people weekly. You're going to have two calculators. So just so you know, and then you're going to use each calculator to populate the information in here. Monthly paid, weekly paid, doesn't consider the idea of this, the semi-monthly and the bi-weekly. So again, you just want to be very consistent with where you're classifying people, because the monthly and weekly are super straightforward. Bi-weekly, I tend to include them in the weekly paid category, and often semi-monthly will also be paid here or included here because they're paid more than once a month. I've also seen it where the semi-monthlies are included under the monthly pay column. Just be consistent. So again, if the tax commissioner comes back and asks a question, it ties out. So just be very consistent. So within the portal, you're going to enter your number of people that are monthly paid and your number of people that are weekly paid. Now, something important here is this is not actually asking you how many people you have working for you. This is asking how many people were paid in the course of that quarter. So let's just, again, keep it easy because I'm conscious of time too, and I want to make sure we get through this. I can't figure out where my, so in monthly, so there are 3 people listed on our calculator. However, in each of these quarters, only 2 people were paid. This is that monthly calculator where we had somebody starting and somebody leaving. So in both of these quarters, this is the number that we are going to include in our tax return. So I'm going to flip between those 2 screens. That on our monthly, on our tax portal, it's saying how many people were paid. We're going to put in 2, and it's asking for monthly, for the total remuneration, we're going to put in 54. So we're going to have 2 here, salaries and wage, and you should split this out. So the total of what you're going to put in here should come to 54. So you're going to have salaries, leave pay, commissions, bonuses, fees. So this is where you put director's fees. And if you do have discount things, this is where you're also, if you have employee deductions. So all of these split out, all of your taxable remuneration is going to be split out, and it's going to come to 54,000. That was a small lie because we had a dividend in there. All of your remuneration, excluding dividend, is going to be put in this section. And you'll sorry, and I'm going to put this back on display screen. So this is where you're going to put all non-dividend remuneration, and then you click. I think it's next. For self-employed people, this is where you're going to say. So again, if you're self-employed and you're a 1, you're going to have 1. And then what your actual remuneration is in total. This is the dividend section, and I know I'm going quite quickly, but I want to make sure, again, I want to get through this and then have you have a couple of questions at the end. So this is where that dividend section comes from. So it says number of self-employees, deemed employees receiving dividends in this quarter. And again, this will vary depending on how many people are getting dividends, but again, let's just assume it's 1. 1 person got a dividend. Total dividends declared to date. So this is going all the way back to the beginning of the fiscal year and saying how much for this year has been declared. So you would enter that. What's the total of the dividends declared this quarter? You're going to enter that. And then your total deductible this quarter. So again, this can be up to $10,000 for the fiscal year. If you haven't taken anything prior, you could put $10,000 in there. If you've already taken part of that $10,000, you cannot take more than your $10,000 allotment. And then this section K is if there's remuneration not taxable to employees, so that's kind of a special thing. Section L, this is the employee portion of the tax calculation. This little box should look very familiar because it looks just like this little box. And so you should be able to pull your information straight out of your calculator and put it straight into the portal without having, again, to fuss around with it. Which is, again, it's a life changer. Now, what I will tell you, a little tip or trick, it is looking for this first line for your deduction. I think it's 2% now, that this first line has to be 2% of the total remuneration. If it is not, and there are times in the calculator, if somebody has bounced between bands, that their deduction may not be exactly 2%, the tax commissioner would like you to file a manual return for those because there is a challenge with the portal. I have also found sometimes it's just a rounding thing of a couple of cents. So what I will do is adjust the deduction to be exactly 2% and add, if there's 3 cents difference, I'll add the 3 cents to the other line, because again, if it's just a little bit of a rounding error, to do a manual return is a lot of effort. So you can, and I don't want to say fudge it, but if it's just a little bit of a rounding difference, just make it 2% so that the portal will accept it, and just make sure you're submitting the right amount of tax at the end of the day by adding whatever the difference is to the next line. The next section is around remuneration paid or given but not subject to tax. So this is where it's asking you for what you've paid for health insurance, what you've paid, and these are the employer benefits, what you've paid for, if you paid for students, because students are actually exempt while they're on holiday, for care of the disabled, payroll tax withheld. So lots of information, but this is not going to impact the tax calculation at all. What the portal then does, and I'm skipping a few screens here, is when you click next, it takes the information that you've put in as far as the remuneration, and it says, okay, great. It's doing that double check on the 2%. It's saying, is the total remuneration in line with the band that you told us at the beginning? If all of that lines up, then it's going to do your employer calculation for you. It's going to say, okay, based on where your band is and what you put in here, your employer portion falls into a certain rate. And again, based on your total remuneration. If something is not right, you're going to get a screen that has some red writing up at the top, and it's going to tell you what you've done wrong. So if you've said here that there are 2 monthly paid people, but down here you only have 1 person, it's not going to let you go any further. If you've said within this section that you've paid $50,000, but in the employee section you only have $48,000, it's not going to let you go any further. It's really looking for there to be consistency throughout your return so that there's a clean return being submitted. So when you get, and it's so frustrating when you click next and you get this error message, but it really does tell you what you're doing wrong. So just go fix it. And it's the greatest feeling in the world when you click next and you actually can just file a return. Once you've got kind of this clean return, you can say, I'd like to e-file. And this is the screens I just wanted to show you, because where I was saying to you that it will not just go and get money, you actually have to go and say, okay, based on my tax return, I owe a certain amount. Yep, I'm going to either pay the full amount or I'm making partial payment, depending on your circumstance. When you click next, it's then going to take you to a payment screen where you're going to say, I want to pay by direct debit from bank. You're going to put in the account number. The account number that you put here has to match the information that you submitted to the tax commissioner, and the name of the bank. If it doesn't match, again, it won't let you go any further. And then when you click next, you're going to get something that's like success. You will have your receipt will be both emailed to you, as well as you'll have a screen that pops up that has that information on it. You can print it if that's something that works for you. But again, all of this will be held in the portal for later use. So somebody had asked about penalties, and again, I don't want to end on a sour note. We're actually going to go to questions and not end on a sour note, but be aware that if you don't file, there's a 30% late filing penalty. If you file, if you're not able to make the whole payment, you are still better off filing, paying whatever you can or the minimum, because then there's late payment penalty of 10%, and there's a huge difference there. So you are far better off filing your return, getting it in there, whether or not you can pay it, because again, that avoids a much larger penalty. Again, this is all going to be emailed out, so our contact information is going to be there. In the next 2 weeks, there will be a couple of hour slots available. Those are paid slots, and they are first come, first served, but also first paid. So thank you for understanding how I earn a living. But free resources. The Office of the Tax Commissioner is free, so do not pay for services unless you have to. So I'm not a fan of pushing that. So let me just jam to the questions here and see what we can do in our last 5 minutes here. So, okay. If you have a fine for late payment, can you simply pay without having to fill in the form? If you have a fine for late payment. So I think what this is asking is that you've gotten an assessment because you didn't file a tax return. You can You can just pay whatever they've assessed you if you agree with the amount. I personally would rather file the return and make sure that the amount that I'm being assessed is correct. So you can actually refile and if, again, just making numbers up, if they've assessed you 500 but you only owe them 300, I would rather pay the 300 and then, you know, if there's penalties and interest on that, if it's going to be less than the amount that they're saying you need to pay, I would actually go through the process of paying the of doing the return and then paying it. If you agree with the amount that they say you owe, then yes, you could simply pay without having to fill in the form. Okay, if you're a retail business this quarter, I should have a tax exemption. How or where do I state this on the portal? That is a great question. So this, is when you are filling out the portal, you would say employees, actually you don't have to put it there, sorry. Yes, I think you do actually, I'm sorry. I'm running out of steam after 2 hours here. So do you have employees in special situations? Yes. I'm not telling you the truth. You do not have to put that there. My apologies. You, as a retail person, are going to fill out this form as if you're paying the whole amount. However, for January through March, the employer portion is going to be 0. So here in section O, the gross remuneration not subject to the employer portion of payroll tax is what you're going to put here. And when you go to pay, it should only, once you click next and you look at the return, you should only see the employee portion with tax on it. So once you're happy with that, then you would continue. So that's where you would pick up your exemption for the employer's portion for this quarter. Okay. Do we separate? Do you have separate calculator sheets for weekly and monthly paid? We have both. So yes, sorry, and I should have said that right at the beginning. You will have separate calculators. If you hire a local college student, where do they fall for taxation? So that is a great question. And what we can do, so on the tax commissioner's website, students on weekends or vacation employment are excluded from taxable remuneration. But if you have somebody who's basically working for you kind of every day, that's not actually student remuneration. Student remuneration is basically what is on the website, which is on weekends or vacation employment, which they are considering kind of Christmas or summer break. If students are tax exempt, you put them in the calculator. You do not have to put them in the calculator, but you do need to report them any student remuneration on this line in the portal or on your tax return. Okay, in the payroll tax return section O, so here we are, section O, remuneration paid by employer but not subject to tax, number 8. Remuneration not subject to tax, yes. Is this the payroll tax employee portion paid by employer? So if the payroll tax employee portion is paid by employee, this should not be. Okay, so there's a lot in this question. So I think what this person is asking is around the employee benefits that are paid by employer. Those are included in actual remuneration on section A, which is employee deductions paid by the employer, because those are taxable. So anything that's going to be taxed is going to be in section A. Things that are in section O are basically things that will not be taxed. So this is where you'd include it here. Tax, you don't get double, there is no double dip. So payroll tax that is paid on behalf of an employer is not taxable. Employee, I keep messing that up, is not taxable. That is generally for health insurance, pension, and social insurance, which are not on exempted plans. Tax, the tax commissioner is still here, or someone from the tax commissioner is still here. And I see what you're saying. So I've got the wrong, I will update this. They've given me a different email address for the tax. So I'll change this before I send it out. 1 second, please. Change email. On section O, statement of remuneration not subject to tax. Do employers not pay tax on remuneration such as HIP paid for employees? Right. So I think I just answered that. So when you are putting in remuneration for employees, oops, I lost the screen. You want to remuneration that is taxable should be in section A. Section O is around information that is not taxable. So when you are paying tax, so if you're paying HIP on behalf of your employees, the employee portion is taxable and would be included here in section A under employee deductions paid by employer. You're awesome. Thanks so much. Thank you. Our property was 0% tax for fourth quarter. I didn't complete a form for exemption. Didn't know this. Where is that form? Okay, so when you log in to the portal, if you are filing a nil return, that's actually, so as they're stepping you through these beginning questions, if your remuneration for the quarter is nil, you click it here, and then basically it skips you right to the end. So it takes you right to the end. If this is now going to be done retroactively, you're going to want to get a manual form from the tax commissioner and fill it out such that they then have a nil return on file. And you may, if you've been assessed, you may want to appeal to the tax commissioner for leniency on not knowing that there was a nil return filed. Those are assessed on an individual basis. There is no guarantee that that they would waive penalties and interest. Having said that, I have always found the tax commissioner to be very eager to work with people who are trying to get it right. So I'm not going to put words in the tax commissioner's mouth, but that is the space I've always found them to work with. Oh, there's lots of thank yous and help and well done, and thank you for that. So number 8, is this the EE portion deducted from their paycheck? So let me just go back to number 8. Number 8, payroll tax withheld by employee. That's correct. So this is looking for you to report on the deductions withheld by employees. Self-employed paying your own insurance every month, is that deductible? Where does that go? So again, deductible I think is being used as taxable. So if you're paying your own health insurance, half of it would be considered a taxable benefit, and you would include that as part of the remuneration that you're putting into the tax calculator to calculate the employee portion of the tax. Okay, I think I covered, and I'm sorry if I missed anybody's questions because there really are quite a lot here, and we are now 3 minutes over time. I'm going to update the email address that's on the last slide so that you guys get the right information for the tax commissioner's office. And I'm so appreciative that they were here today. Sorry, and I just want to look at my notes one more time just to make sure I haven't missed anything super important, because that would be distressing. Talked about the portal. Be patient with yourself. Again, the portal is one of those things that the more you use it, the more you'll get familiar with it. So just please be patient. I think I covered everything else. So I just wanted to thank the BEDC. They work tirelessly on supporting local business. They really have a great team. So if you're not connecting with them for all of the services they're offering, please register with them. They really are amazing. And I really encourage you to plug in with them and their team. Certainly the Abacus team, I and my team are here to assist. I'll just reiterate though, this is what we do for a living. So if we're going to offer further services, it will be paid, which we're delighted to do. We work primarily with local businesses and are so excited to hear from you. Please give feedback to the BEDC. I think they're going to be sending out a survey on if this was useful, if I talk too fast, if you wanted me to drink more water because now I'm parched. Like, please give them feedback on what's happening here. And happy tax season. Please get your stuff in by April 15th to avoid any penalties. And thank you so much for coming today. So until next quarter,